let's walk through a step-by-step trade of buying a call option. So first, I will open up my chart. As you can tell, I'm looking at SPY on a 4-hour time frame. It has come back and it has hit my moving average, and I think that it's oversold, right? I'm using the RSI to determine if it's oversold, and right now I think it is. It's about 36. So let's just say I want to enter a position because I think it's going to move to the upside in the next couple days. Okay. So the first thing I'm going to do is I'm going to come over here to trade. I'm going to determine my expiration date. I'm going to come out. I like 366 is my expiration, and then I'm going to look for my strike price. So I'm looking at around 0.7 delta, and my open interest, I can look and see it right here. So right around here is where I would be buying, and I like this 650. That's a decent, that's decent. I like this one right here. 0.8 delta, 4,000 open interest, about $8,000 at $650. So just for the sake of this example, I'm going to buy this call. It's going to cost me $8,476. What I can also do, if I want to get a better price, is I can right click, I can copy this, and I can go over to my active trader, and I can paste this here. Oops, I'm gonna keep it SPY. I'm gonna come over here to my active trader, and I'm going to try and get a good price on this one. Just for the sake of this, I'm not going to spend too much time doing that, but if I was actually trading it, I'd try and get a better price. So right now I'm just going to buy my limit here, and I'm going to confirm, and I'm going to send it. And that's how easy it is to enter into a position on an options position. And as you can see, this is going to show you how much you're open, and that's going to see how much money you've made on the day. So that's super simple tutorial, super easy to do. So that's all you would do when you find a stock that you like and it matches your criteria and you think it's going to go up. Now let's move into an example of buying a put option. Say I think it's going to go down, even though I don't really think it's going to go down. Say I think it's going to break down past here, and I think it's going to move down. What I'm going to do is I'm going to come over to trade, and what I'm going to do is I'm going to come over to put options, okay? And I'm going to choose, what I can do is I can go ahead and do 0.7 delta, okay? Because I don't think it's going to get to 745, or I want to save as much intrinsic value as possible. So I'm going to come over to this one. Delta is at 0.7, and I'm going to purchase this one right here. I'm going to confirm and send it. And now you can see that I'm in a put option at $6,735, and you can see my position here. My call is right here at 650, and then my put is at 745 because I don't think it's going to get to 745 within that time frame. So that is how to take a put position, and you can see your profit on the day right here. Now I'll go into covered calls, and if you were wanting to get into a covered call, so right here, let's say for example, I like covered calls on, I'll just keep it congruent and I'll say SPY, okay? What I'm going to do is instead of trading on options, I need to purchase 100 shares of stock, okay? Because with covered calls, you need to purchase shares of stock. So there's a couple ways that you can do this. You can press trade, and you can press buy market here, okay? You can go to your active trader, you can trade here. Just for this, I will go ahead and purchase my 100 shares here, okay? I'll purchase my shares, edit, I want to do it a limit order. Actually, I'll do a market order. Okay. I'm going to purchase 100 shares. All right. Confirm and send. Now I've purchased my 100 shares of SPY at 686. Okay. Now what I'm going to do now is I'm going to go back to trade. I'm going to go to all products, and now I can sell calls against it. Okay. So now I have my 100 shares. What I can do from here is I can go to trade, all products, and say I want to get paid out every single 14 days. Okay. And I don't think the SPY is going to get to $695. Say I don't think it's going to get there. I don't think it's going to go $10 in 13 days. What I can do from there is I can go over here, I can press sell, and I can go ahead and confirm and send, or I can try and get a better price, but you can see that the bid ask spread is only $1, so I'm not going to worry about it too much. And I'm going to confirm and send it. And instantly I got paid $278 on my 100 shares of stock that I own. And you can do this for every 100 shares of stock that you own. So that's covered call. That's essentially what it is. If you have 100 shares of anything, you can just sell calls against it and make that, essentially just make that income every single week, bi-weekly, monthly, day, however you want to do it. That's what you can do. And that's a good way to create some income just by holding shares. Now let's go through an example of selling a cash secured put. So the first thing you're going to do is you're going to open up your chart and say, I'm like, you know what? I can't purchase 100 shares of stock at 686, but I can purchase them at, I don't know, 660. So instead of 68,000, I have 66,000, but I still want to make money. What you can do is you can go over to the options chain. Okay. Just for simplicity, I'm going to go about 2 weeks out, and I'm going to do this one and say, I'm like, you know what? I have 66,000. I don't have enough for 100 shares, but I still want to make money. What you can go ahead and do is you can come over here to the options chain on the put side, and you can sell a put. Okay. In order to do this strategy, you would need to have enough to purchase 100 shares at the strike price. So you'll go ahead and sell this. Okay. You'll confirm and send it. And now you've collected $120 for essentially the right to purchase 100 shares at 660 if it goes below. So if the stock stays above, you get to keep that 120 no matter what. But if the stock goes below 660, you're going to have to purchase 100 shares at $660. So in order to do this, you need $66,000. But you can obviously do this on different stocks with better price points so that you're not just blowing money. But this is a good way to get good entries on stocks. Say you think that, $680 is overvalued for SPY. You can get in at 66 if it does come down. But you can also make money while you're waiting for it to come down. So very good strategy to do. So that's essentially just selling a cash secured put is what that is. And I'll see you on the next video. Now let's talk about the wheel strategy with an example. So I'm going to go ahead and kind of speed run this, but I'm going to keep it consistent, and I'm going to do it with SPY. Okay, so I've reset the account. I have no positions. This is how you're going to set up the wheel strategy if you do plan on doing it. So the first thing you're going to do is I'm going to do it with SPY, for example. Okay, say I want to get paid out bi-weekly. I'm going to pick my expiration date again, and I want to get paid 13 days out. Okay, the next thing I'm going to do is I'm going to look at my delta and say I want to be conservative for this one. I like 0.10. I want 90% chance that I'm going to make this money. Okay, so what I'm going to do is I'm going to come over here And essentially, I just talked about this, but you're going to sell a put. This is a cash secured put, okay? And you're just going to sell these until you get assigned the shares, okay? So once I confirm and send this, you're going to see that the money will be instantly added to my account up here, okay? Because this money is now mine, all right? So when I confirm and send it, it goes there. Actually gave me $119. So I just made $119 and it's in 13 days, essentially. So now what's going to happen is, say, so I picked the strike price for, can I see it? I picked the 660 strike price, okay? So if we go in my chart, SPY would need to come down to $660 in 13 days. And what happens is if SPY does that, I'm going to be assigned the shares, okay? Meaning I need to have $66,000 so that I can purchase 100 shares. That's exactly what's going to happen is I'm going to purchase 100 shares of stock if it goes below 660, okay? If it stays above it, nothing happens. The contract is going to expire worthless, and I'm going to essentially, I've already received the money up here, but I do not have to purchase those shares of stock. And I can just do this over and over and over and over again and essentially just make more money. It's the same thing as a cash secured put, but what happens next is if you get assigned. So, and this will happen eventually, running this strategy is you'll get assigned. And what happens once you get assigned is SPY will come down to 660. It'll come down to 660. It'll purchase your 100 shares here, okay? It'll purchase your shares at 660. And then now what you're going to do is you're going to sell calls against that. So it's kind of hard to show it, but let's just say that SPY, let's close this position, okay? Okay, say you just got assigned and now we have 100 shares of SPY. All right. Now we have 100 shares of SPY. What you're going to do now is you're going to sell calls until you get assigned. So 13 days, what you're going to do is you're going to come out here. You're going to look at the delta. This delta, I want this one right here. Okay. Say I like 10%. Actually, let's go 20%. I like this one. I have an 80% chance that it's not going to hit this because I like this one has more income. I want to make more money. And I don't think it's going to get to 700. So what I'm going to do is I'm going to sell this one. And I'm just going to keep doing that because it just got added to my account. And as you can tell, now I have the 100 shares, but then I also have this one. And I just am essentially collecting money. And if the stock price goes up, say it's at 660, if the stock price goes up, I'm going to make money on the stock price going up, but I also made money because I collected this premium. So that's essentially the wheel strategy sped up. But yeah, real example of the wheel strategy, super sped up, but all you start with is a cash secured put, and then once you get assigned those shares, you're going to run covered calls against it. So it's just a repeat. Rinse and repeat. And this is really, really good for stocks that just kind of move flat. Like you can continuously make income on stocks that move flat or during like consolidation. So this is a very good strategy for periods like that. Or just in general, just to receive some of that income. A lot of people do this during retirement, or if they want like monthly income from the shares that they already have. So that's the wheel strategy.